Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, January 16th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the question is silver, is that market about to peak? This is something that I've been considering, something that I just think about in the background here, because you look at the financial news agencies, they are reporting that this is one of the most crowded trading commodities on the street. Now, the reality is that they're just saying that based upon their feelings because they hear a lot of discussion about the precious metals, and it takes away from the Mag 7 or whatever their primary product is that they work with closely. The reality is if you look at the open interest, you look at the ETF flows, well, they are below some of those record highs. So as far as most crowded, inaccurate. Most covered, possibly. Now, one thing that I have to know is that the only way that I could survive a 25-year career in this commodity broker is by implementing strategies that work both ways in both directions in any of these markets. So if you look at certain times, clients, well, they would take short positions on markets that are working closely with me, specifically like in the equities when the market had turned bearish on March 2nd, 2025. And then what happened is as that tariff tantrum kind of unwound itself, 150% tariffs being implemented, now only 100, now down to 50. Something else when you look at government shutdowns. Well, what happens? Every single one of these government shutdowns, usually the U.S. equity market sells off, and then what happens? Well, 100% of the time, the U.S. government reopens and markets get that relief rally. So just remember that, on May 2nd, that's when we turn back to bullish on the U.S. equity markets. And you want to realize that markets are a living, breathing mechanism, and it teaches you the importance of having an unbiased and objective strategy in the markets. So remember Bruce Lee, he said, be like water, my friend, meaning you want to be able to adjust your thinking and actions based on any situation. I'm going to tie this in the silver market in a minute. So one other thing here is unless a signal goes from bullish trend to neutral trend, and when it goes neutral trend, you recalculate where it goes to back to bullish trend and where it breaks down to bearish trend, so that you have the neutral as where you go unbiased, and then you wait for the market to present itself. You don't just carry a continuously, I see too many people in the equity side, continuously bearish trend. It's overbought, this, that, feelings. And then what happens is they miss the whole move up. Now, when the market does break to neutral and then bearish, we go with it as well. So you always want to follow the signal, and the signal right now, silver and many of these metals does continue to remain bullish. So you look at the precious metals overnight. Well, silver had dropped on Friday as the U.S. refrained from putting those import tariffs on the critical minerals, and it's still up more than 14% the week, and it shows that surging demand for precious metals. And we are up about 25% this year after hitting a record high this week. One thing to note about today's trading session and the overnight trading session is we are seeing some consolidation after yesterday's wide range on some of those news headlines. Low 89.21. I think your key level sport to keep an eye on here, at least your wake-up call, would be if we broke yesterday's low in those 86s. The high 92.64. Keep an eye on yesterday's high, which was like 93.70. The last, as of this recording, right around 90.60, down about $1.65. Now, something I do is I keep a notebook, and what I'll do is I'll label it on a day-to-day basis, kind of one or two standouts in the individual markets that I pay attention to and keep a focus on. And one thing to note is that if you go back to Monday, well, gold and silver, they did make some new highs here, and we had that massive sell-off in the stock market, which recovered quickly because of the fact that the U.S. Justice Department threatened the Federal Reserve with a criminal indictment here. I thought that Trump was going to take out Jerome Powell in a set of handcuffs and throw him in the paddy wagon. It didn't play out. It was downplayed. Now he's saying that he's going to keep him in for the duration of his career, his contract or whatever. So now the market gets that relief rally on that, and it's just another flash in the pan scare tactic. But some things that are going on behind the surface in the silver market is that, one, you got the CME. They did change the silver and other precious metals margins. That was on January 13th as a fixed dollar amount of the notional value. So if you look at, say, something like the 5,000 ounce contract, it sits at, since it's $90, $45,000, 10% of it about, that's going to be the margin requirement. So if we go up to 100, it's going to be 50,000, go up to $150 for silver, it's going to be $75,000 for that margin requirement here just to trade that particular contract. Now, if you go on to Thursday, that was when the U.S. Commerce Department, that investigation on whether certain metals and critical critical minerals pose that threat to national security. Silver prices fell as investors took profits, and the U.S. did not decide to impose those tariffs on those critical minerals. Now, remember last time when we saw in May, we saw copper futures fall about 30% as they changed some of those tariff things. So we want to keep an eye on some of these things here when it comes to these metals markets. Now, you do have Shanghai, so it's not just like the CME raising margins or things like that, and it's not just the Commerce Department on the tariffs. You look over in Shanghai, the Shanghai Exchange, they lowered the maximum number of intraday opening positions on silver to only 3 lots. So they are curbing some of the speculation in there and the open interest that's possible. And that effect is going to go on to January 20th, take effect the night of January 19th. They're basically cutting it more than half. So you used to be able to trade about 7,000 lots, and now it's only about 3,000. Now you go over to China. China's clamping down on high-frequency trading here in the mining stock sector. That's new news that I heard come out overnight, as well as that Shanghai news. Then you get this other report that comes out that's an industry report, because remember, silver is also makes up 54% of its industrial demand. You only have a small section of it that is really the speculative demand and this investment demand and things like that. So you're seeing those soaring prices for silver. They're putting an extra squeeze on solar panel makers here. So the trace amounts of silver in the solar cells now accounts for about 29% of the total cost of a panel, and that's up from about 3.4% in 2023 and 14% of last year. So if you look at these panel makers, they're responding by raising prices and accelerating their plans to substitute silver with cheaper materials like copper. So this sector is likely to reduce silver consumption by about 17% this year. Apologize for that.
Prices jump.
So you look at the precious metals, you got the gold market, and you look overnight, average trading range here, average true range for 14 days, $81.80. That's coming down a little bit. Key level support. So this is where I look at these levels here and I run these algorithms where the market would go from the bullish trend to the neutral trend. On the gold market, it's 44.18. That doesn't mean if we close below 44.18, I'm going to recommend clients go short on there. It's just that it's going to go, hey, there's a timeout on the field. We're going to take a break here for a moment. We're going to look at things. We're going to call a new play. We're going to go back in there. We're still on offense. We called a timeout. We're getting back in there. We're back on offense, all right? But we might change a couple things up here. The strategy, go maybe from large, bigger futures, smaller futures, running more of a defensive play here, still by bringing in more tight ends around the offensive line, things like that. Keeping things a little bit tight rather than spread out. Maybe only have 1 or 2 wide receivers. Getting too Bears focused over here. Got my mind dialed in for that. So silver, 14-day average true range, $5.60. Key level of support, trend support for me, $80.36. You look at the precious metals flows. They were buying gold. They were buying palladium. They were selling silver. They were selling platinum. You look at gold. Exchange traded funds added 71,000 troy ounces of gold, 4th straight day of holdings. ETF flows rising 0.5%. So gold holdings and ETF flows, those are continuing to march away. Now you look at silver, bit of a different story here. Could be some institutional selling, down 0.3%. They cut 2 million ounces of troy ounces of silver in the holdings in the last session, and we're down 1.3% the year. Gold silver ratio 50-1. Now, looking at the equity markets here, it's early days, but you got 28 of the S&P 500 companies they've reported so far. 89% have beat analyst estimates, 11% have missed. You got investors pouring in $12 billion in cash and equities over the past week here. Largest inflow here since we saw that tariff tantrum and that V-shaped recovery. We're going to have some earnings come out here from State Street and PNC Financial here. And next week, we're going to have 6% of the S&P 500 report. We're going to have industrial production coming out at 8:15. We'll also have some home builder survey that are coming out. You look at the CME's Fed Watch Tool, no real change there. 5% for January, 18% for March. Dollar index, weaker along with the peso. We've got a rally going across the board. All the foreign currencies, no big movement though, anywhere across the board. 10-year treasury yields 4.17%. VIX at 1640. Bitcoin consolidating 95,000. You get S&P Gamma exposure. It's neutral. We got a big option expiration. And then European stocks, hey, they're taking off. 5th straight week of advancing. Longest winning streak since May. These investors are confident with this AI demand and earnings, and then Asian stocks rose for a fifth straight day. MSCI Asia Pacific closing at record highs. So you guys have a great weekend here. You need anything, I'll be back in Florida over the weekend. I'll put out the chart pack navigating the week ahead here. And if you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.